Welcome to the Transparent FX Academy. I'm Nick and I'm a top author trading with over 190k reputation points. In this video, I will be speaking about USDCHF. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds, so the big players in the market are doing and how they're moving their orders. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. Now, without further ado, let's jump straight onto the charts. Starting here on the monthly time frame, what we can see is that at the moment we have a market which is testing quite strong monthly demand and support. In fact, from here, all this previous rejection to the upside was created, confirming this area as quite strong monthly support and demand. At the moment, the market is approaching the exact same zone, so there is definitely the possibility of seeing a potential test of this strong monthly demand and support area, and then seeing a rejection to the upside being created away from this support zone. So from a monthly standpoint, everything seems quite bullish. We could expect a bit more bearish price action and then a potential rejection to the upside away from this level. Dropping down on the weekly time frame, what do we see? Well, from a weekly standpoint, we can see a very strong impulse to the upside, followed by this correction. Now, in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have the 0.3 to 50% and 0.618 Fibonacci retracements lining up exactly this area. Now, this area was acting as previous support here, turned resistance here, which is now again turned support here. So there is definitely the possibility of seeing a deeper test of this confluence of support area from a weekly perspective, inside of which we have both the Fibonacci levels and the previous resistance turned support, and then to see a potential push higher away from this level. Now, dropping down on the daily time frame, what do we see? Well, from a daily perspective, what we can notice is that in creating this move to the downside, the market has also just provided and created this M pattern, specifically in overextended M pattern. And generally speaking, after the creation of an overextended M pattern, you would expect the market to want to create a rejection to the upside. Now, what we also know, because we have seen it previously, is that all this area here is confluence of support. We have identified this on the monthly and also on the weekly timeframes. So there is a good probability that the market might want to reject this area to the upside, especially because inside of a confluence of support zone, you would expect to see more institutional longing, which at that point would further increase the probabilities of a potential push higher away from this area. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing, what do we have? And by the way, before I forget, make sure to go and join my free Telegram channel if you still haven't. You find it here on the screen and also with the link in description, so you never miss new updates. Now, back to the analysis. As I was saying, what do we have when it comes to how institutions are moving their orders? Now, first of all, when we're looking at the data for the CHF, we're actually already checking CHF USD because all currencies on the spot are traded against the USD. But since we want information on USD CHF, we simply have to reverse everything. And what we can see here is that with the last reports, net positions have been massively decreased. We went from minus 3.9K to minus 17.5K net positions, showing how institutions are moving to the bearish side for the CHF, making USD CHF stronger, because if institutions short the CHF, they have to long USD CHF. So this increases the probabilities that we could see a potential rejection to the upside away from this confluence of support zone. So what would I expect in a situation like this? Well, As usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to a bullish market at that point, I wouldn't be surprised to see a potential push higher, rejecting that confluence of support that we have just identified. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked both in description and on the main page of my YouTube channel. Here, you have the possibility to gain access to the most complete, all-inclusive mentorship program that I have created for you. As soon as you open the website, you will see this video breaking down everything included in the mentorship program. And in the program, you have the possibility to gain access to all my courses and also to the software, so the COT data software, which is exactly the one that we used in this analysis, the trading station software with Telegram signals integration, which puts together everything that you need as a trader all in one interface. You also have the possibility to gain access to one-on-one private mentoring directly with me, so you will have my personal contact. And if you continue to scroll down on the website, you will see that directly from the website, you will have the possibility to register and gain automatically access with the email and password that you will create during the registration process. So at least I suggest that you go and check it out right now. The link is both in description and in the main page of my YouTube channel, and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I'll see you in my next breakdown.